Hi there, it's Amy Solera. I want to give you an update about what's going on with the Pittsburgh real estate market. Here's a look at how long it's been taking for houses to sell. So here's a look at this spring, the past 3 months. In March, houses were selling for 31 days, April was 25 days, and May was 16 days. And I should also mention that all of these numbers are based on single family houses in Allegheny County. Here's a look at last year for comparison. Last March, houses were selling in 35 days, April was 23, and May again was 16. So this year pretty much exactly matched what spring looked like last year. The Pittsburgh real estate market is always slower in winter, and then it picks back up in the spring and summer when the weather gets nicer. So in trying to predict what might happen this summer, this is a look at last summer. So last June, houses sold in 18 days, July was 17 days, and August 19 days. So people always ask me what's going on with interest rates. Interest rates for 30-year mortgages are currently in the high sixes, low sevens. I know people keep asking when the rates are going to drop, but the Federal Reserve is looking at inflation, and until inflation drops, the rates are going to stay the same. In addition to looking at inflation numbers, the Federal Reserve is also looking at unemployment. So either inflation needs to go down or unemployment needs to go up in order for the interest rates to drop. If unemployment gets too high, then the rates are going to drop. So lenders right this point are mainly looking at unemployment versus inflation. And they think that unemployment might get high in the fourth quarter of this year. But as of July, I mean, the reports just came out this week, unemployment is still low. So at this point, it's predicted that come July, there is not going to be a rate cut. The prediction is also that if rates do drop, they're going to drop to the mid sixes. So it's not going to be crazy. It's not going to go from 6 to 3 back where we previously saw it. Something interesting, I was talking with a lender yesterday, but she was telling me that currently there are historically high levels of credit card debt. And that came about because during COVID, there was an influx of money. Everyone had so much money and they increased their spending. And then, inflation went up and now everyone's budgets are tighter because it costs more to buy anything right now, but people haven't changed their level of spending. So instead of actually having the cash to make these purchases, which they had been having the cash available, they're now just putting all of this spending on their credit cards. So whenever the mortgage lender is pulling the credit reports, she said she's just seeing that a lot of people have very high credit card bills right now. I constantly hear people saying, oh, I could never move, I could never sell my house because my interest rate is 3%. Either I bought it during the pandemic when rates were that low, or I refinanced at that point and got a 3% interest rate. So they have a 3% interest rate. There's no way they want to go to a 6% interest rate. However, back to the credit card spending, if people have a lot of credit card debt, even though they have 3% interest rate, they maybe have 20% on their credit card. So if you would take the equity in your house, pay off your house, you go from 3% and 20% to 6%. Overall, even though your interest payment is higher for your mortgage, you're still putting yourself in a much better financial position. Okay, moving on. So, how much are houses selling for nowadays? This is a look at median sale price over the past 5 years. As you can see, houses sell for more money during the summer months than in the winter. You can see that over the past 5 years, the house prices have continued to appreciate. But it's interesting to see that in the beginning 5 months of last year, house prices dipped. And I think that's because people were scared about what was going on with interest rates. The rates had been so low and then they jumped up so quickly. I think it just made everyone pause. And then also, when rates are higher, that limits how much money people can spend. It limits their purchasing power when buying a house. So they can't afford as much. And in turn, they don't pay as much. So I'm sure you're aware that over the past few years, there have been very few houses for sale. Maybe you either have experienced this personally or you've heard the headlines on the news. But the fact that there have been very few houses for sale means that many people will be bidding on the same house. That's what has kind of created part of what has created the frenzy over the past few years. Not enough houses for sale. So in real estate terms, we call this inventory. As a little refresh about inventory, a balanced market is between 6 and 7 months worth of inventory. So that means if no more houses were to come on the market, in 6 or 7 months, all of the houses would be sold. Less than 6 months is a seller's market. The sellers have the upper hand. There are more buyers than people wanting to sell their house. More than 7 months, it's a buyer's market. So there are a bunch of houses on the market, but not enough buyers to buy them. So how do these numbers play into what's happening in Pittsburgh? This is a look at how much inventory there's been since the beginning of the year. So as I said, less than 6 months is a seller's market. And you can see based on these numbers, this is a very strong seller's market that we've been in. So now let me take you back 5 years to see what the inventory has been looking like, because it's been quite a few years where we've been feeling that there aren't enough houses to buy. This graph only goes back 5 years, but for that amount of time, it's always been a seller's market. And you can see that because all of these numbers on the chart, you can see they're all less than 6. And we had said that 6 to 7 is a balanced market. So these are all well lower than 6. In May of 2020, we had the highest inventory in the past 5 years, but that's because we were in lockdown during COVID and we couldn't sell real estate. From January through May of 2021 till now, you can see that inventory is slowly increasing. These numbers are higher than they were in 2021 and 2022. And during that time, that's when interest rates were 3% and houses were flying off the market. That was a very, very discouraging time for buyers. I still hear buyers saying that they don't want to buy right now, they want to wait until interest rates drop. However, we remember the craziness whenever interest rates were 3%. And if everyone is waiting on the sidelines for rates to potentially drop again, they're all going to jump into the game at once. And so it's going to go back into the crazy bidding wars of 21 and 22. My suggestion to buyers who think they want to wait is to buy a house now that you can afford, and then if rates drop, you refinance, and then your payments will go down. A question that buyers are asking me when they find a house that they like is, how much should I offer on it? Here's a look at how close to the asking price houses are selling for. So as you'll see, the 100% or higher means that houses are selling for at least the asking price, if not over. I mentioned earlier that the winter is a great time to look for a house because there are less buyers looking and less competition. And as you can see in January and February, houses were selling for less than their asking price. But so far year to date, and it's probably going to continue through the summer because that's a peak time to buy houses, houses are selling for at least their asking price. So when you see a house that you want to bid on, don't go into it thinking that you can get it for under the asking price. Yes, I mean, if it's been sitting on the market or there are issues, there are times when that happens. But if it's a brand new house that just came on the market, go into it expecting that you need to at least offer the asking price, potentially more if there are other people bidding against it. Overall, the number of houses for sale has been increasing. I think that's because people are sitting on the fence now that interest rates are higher and they're holding back because they're waiting for rates to drop. I think that is what has caused the number of houses to increase. But my main piece of advice, if you're a buyer and you want to buy a house, don't sit back and wait for rates to drop. If rates drop and you're bidding against multiple people on a house and you have to bid up, you would potentially be paying the same amount, even at a higher rate, but spending more money than if you would just buy the house for the asking price and pay a 6% interest rate. You're balancing yourself out. There's no difference. I hope you found this information useful. I'd love to hear from you. Let me know if there's any other information you'd like to know about the Pittsburgh housing market.